All right, good morning, everybody. Welcome back to the Opportunistic Trader. It is 10:35 on Tuesday. We're joined now by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going, Phil?
I'm doing good this morning. The stock market's crashing up, instead of crashing down. So it's a good day, right? The
Yeah,
earnings are kicking butt and stocks are higher, and everybody is looking for Black Monday, and we got kind of a blue Monday, but a red or a green Tuesday. So
so far it's
things aren't looking so
green.
scary. It is, yeah.
And
So
yeah,
far,
so
it's
far, like
good.
you said, financial earnings have been okay. The market's been trading higher on that, I guess, so far today. But it's the very beginning of the earnings season. And yesterday into the close, stock market sold off pretty hard. And we're seeing it here. S&P is up 27 points. So there's a lot of volatility out there. Right now, volatility goes down when the stock market goes up inherently, but it's still wide ranges. What are you seeing and what are you hearing from the equity side?
I thought it was interesting. You talked about the late day sell off. I mean, the market was rebounding a little bit, earlier in the day, and a lot of what was going on was this drama that's going on with Saudi Arabia, and this reporter that was murdered in the Saudi consulate. And interestingly enough, when it came out, there was a report that came out later in the day that the Saudis were going to admit that something went wrong and that it was an interrogation that went wrong that caused the market to sell off. The fear was that there's going to be some type of ramifications on Saudi Arabia. There could be some sanctions put on Saudi Arabia, could cancel the arms sales, and that shook up the market. So it's really amazing how this drama has played out, impacting not only the oil market, but the stock market as well. I think from the earnings situation, I mean, this is going to probably be the best earnings seasons we've ever seen in our lifetime, right? I think everybody's going to come in beat in the street. We saw that this morning. And it's probably good that we had a little nervousness getting into the earnings because, now we have a little room to go on the upside and celebrate, good earnings before we get nervous about the next set of bad earnings, right?
Yeah, well, there's definitely a lot of stories right now. Like you said, the Saudi Arabia, we got earnings, bond market, energy market. So we'll definitely keep an eye on that. Talking about that energy market, we have the API tonight and then DOE figures tomorrow. It wasn't very long ago. We were trading $77 a barrel in crude. Here we are at 71.50.
Mhm.
What are your thoughts heading into a busy week?
I think when oil hit 75, we thought that was kind of a midpoint. We thought if it got to 77, it was too high. If it got to, 72, it was too low. And here we are at 71. So we think we're too low on oil right now. We have the options expiring tomorrow, which always creates a little bit of a lag time for the market to recover. I think there is some concerns about oil inventories that are coming out tonight. So you have a lot of things at play here. But if the stock market holds on to their gains here, we don't think there's a lot of downside, on the oil from these price levels. If the stock market really takes a hit, then I think we can get into a situation where the market is going to, where the oil market could get hurt. But think of where we're at in the oil cycle right now. Oil prices are still holding up despite the fact that we're deep into the refinery maintenance season. We're going to see Iranian sanctions go into effect in a couple of weeks. We're going to see refineries come out of maintenance in a couple of weeks. We have the tightest supply of distillate inventories that we've had in a generation. And we have the least amount of spare production capacity that we've had maybe in history. I mean, if you look at where global demand is, it's supposed to be over 100 million barrels a day very soon. Our production capacity is not much more than that. So there's not a lot of room for error in the global oil market. I guess if everything went perfect, if the economy slows down, there's no disruptions in Libya or other places, I suppose we could continue the sell off. But I wouldn't want to bet with that. I wouldn't want those odds. we think this market's still an upside accident to happen. Now, I know we've been hearing a lot of people talking about $100 or $200 a barrel oil. We don't think that's the case by a long shot, but we still think 84 by the end of the year is a real possibility, even though that looks further away than it did a few days ago. And seasonally, this time of year, when you're in maintenance season, it's not surprising to see this type of market action, being indecisive, weighing on the weak side. But the overall fundamental picture, I think, is still very solid to the long side. So I would use this weakness to put on, longer term bullish positions as we end up the rest of the year.
Yeah, and what are we looking for in API? And do you think that it's interesting? Yesterday we had Adam Collins on of Movement Capital, who kind of goes over the latest COT report. And the latest COT report is captured, as you know, at the close of business on Tuesday. And, it showed that the spec long position was waning. That said, it captured Tuesday, then Wednesday, Thursday, Friday, we sold off in crude. So it definitely gets a sense that a lot of people got long at bad levels, and the positioning might be closer to flat. Is there something coming up in the data you think that will get the specs back in?
Well, I mean, what we're hearing on the whisper number, we were expecting an increase in crude supply of about 3 million. We're hearing from some sources now it could be only 2 million, though some of these inside sources have been all over the board and they haven't been very accurate the last couple of weeks. The last couple of weeks, we've been getting hit with the flood of crude supplies. For a multitude of reasons. 1 week it was because the exports were down. 1 week it was because the refiners took a big dump into maintenance. But this week, based off what we're seeing, we should still get a big buildup in Genscape, though most of that buildup in Genscape, in Cushing, based off the Genscape numbers, was reported on last week. Later in the week, those supplies tightened a little bit. The wild card this week, which makes it very difficult, is the impact of Hurricane Michael. And whenever you get a hurricane, it messes with the data, and one way or another, either a ship couldn't get out, either a ship couldn't get in. You, instead of strong demand, you have weak demand in the short term, stronger demand in the long term. So it's going to be this one's a very difficult one to handicap. My sense is that if we come in with the build that is less than 3 million barrels, it'll be very supportive to the market. If we come in above 3 million barrels, that will give us some pressure here. But I don't think, you got to be very careful to read too much into data this time of year, because when you're in maintenance season, the builds always look bigger, right? And the draws and products always look smaller. Once you get out of maintenance season, you're going to really get a feeling for where the demand side of the equation is. And we still believe that underlying demand is still very strong.
Yeah, absolutely. What about any other markets? Natural gas has been going crazy. I see even just overnight, we've been trading 331, 321. I know last week the high was about 335. So, we broke above 3. Everybody's been getting excited. It's been trading in wider ranges, but we've kind of paused now around this 320 level. Any thoughts there?
Yeah, heads, buy, tail, sell. Okay, I mean that's where this market is. I can talk about the fundamentals till I'm blue in the face. I can talk about record production. I can talk about new pipeline capacity coming on. I can talk about all that stuff, and it doesn't freaking matter. Look at this weather. It's been crazy. This summer it's been hotter than normal. Now it's colder. Heck, we went from 80 degrees in Texas down to 30 in 24 hours. I've got reports that it's going to be colder than normal in Chicago, but now it's going to be above normal in the Northeast. And the point is that we're not getting a shoulder season. This is the time of year when the weather's supposed to calm down, right? It's not, the Goldilocks weather. Where is Goldilocks? Not too hot, not too cold. We're getting too cold and too hot at the same time. which is making it more difficult for the inventories to build up. So it's been a challenge. If we had normal weather conditions, I'd be telling you, hey, supplies are going to build up. Don't worry about winter at all. We're just 1 or 2 weeks away from getting the market back to normal. But as we get closer to winter, we're not getting an off season, when it comes to power generation demand. Now, we will have some nuclear power plants coming back from maintenance. That should lower the demand side of the equation a little bit. You have some other maintenance issues that we're going to be coming out of, which should level us off. But I'm giving up trying to pick a direction on this thing. I mean, I think you have to look at the short-term charts. Probably a great day traders market. Buy the breaks, sell the rallies. Okay, and if you're looking for the home run play, don't pick a side. Buy both sides. Buy some puts, buy some calls, because this market has the potential to move big either way. And you say, is that a cop out? I go, no, it's not really. I mean, on one side, you look at where inventories are. We are at the lowest level we have been going into winter, probably. I'd have to check exactly, but probably in 10 years. Our supplies are very tight going into winter, when compared to the 5-year average, year over year comparison. So we're in a very tight market condition. On the other hand, production levels are going to be at a record high and probably going to rise over the next couple of months, which should overcome those deficits, assuming you get no demand. So really, more than ever, I think weather is going to determine this market. If we continue these high demand periods, if we get an early cold winter, you better look out. We could be talking 450 natural gas real quick, because the market's going to be playing catch up. On the other hand, if we get back to a more normal kind of situation, the supply side is going to start to kick up, and we could really break this market. So, I just think it's too tough to call. You can play the charts and catch 7 cents up, 7 cents down, but big picture, it really is going to come down to weather.
Yeah. Moving away from energy, let's take a look at fixed income, which everybody was talking about. Possibly was one of the catalysts for the equity volatility increase. Equity markets had their move last week, and where we stand right now, the 10-year is at 317, the 2 years at 287, and the 30 years at 334. So, the market really started to panic a bit when the 10-year got above 325. We're not too far off there. What are your thoughts on the 10-year direction and what that might do to the other markets?
Well, I think the cooler heads have prevailed a little bit. We stabilized on the yields. We saw a big spike in the VIX last week. We saw that pull back a little bit, and I really believe that we got through Monday, and I say that facetiously a little bit, but people were really geared up for a Black Monday, and I mean, obviously, there's a lot of businesses that are feeling the pain from the sharp increase in rates. There's going to be some talk about movement from stocks back into fixed income. All of that is a real possibility. But then you look at the other side of the equation, at 3.19, even though the rates are highest they've been in a long time, and it's been a sharp move based upon, recent events. There's a lot of people that don't think that yields are going to go much higher. That we're the last time we had a big spike up to 3%, everybody thought we were going to go straight up to 4, and everything shook up back then. And what happened is, the rates leveled out. I think the yields could be leveling out here a little bit. And some of the larger concerns that we saw about, continuing spike in yields could have moderated a little bit. So I think the market is nervous because it's not used to a rising interest rate environment, because they haven't had one for a long time. And so when you get these little gyrations up, they're it's a little bit of a shock value. And you also have these outside geopolitical events that was making the market even a little bit more nervous. You had a little flight to quality on, concerns about Europe and, Turkey and Italy, and all that stuff was playing into the market. And a lot of those fears have subsided. They haven't gone away, but we're not we're not getting the headlines, that the world's falling apart. So stability is probably a good thing for stocks, good thing for yields right now. So I think the worst is over for that. And I go back to what we're going to see. It's probably some very strong earnings. It's going to take the people's focus off of yields, get it back on the stock market, and people are going to start looking at what will be continued earnings. It will continue to beat expectations um, for the rest of the earnings season. And unless I'm going to be blindsided here, and I think the focus will get back on stocks, and we'll see yields start taking a back seat here for a little while.
Gotcha. Now, have you started thinking about the big event for tomorrow? And I'm not talking about the
Woo-hoo!
inventory numbers. I'm talking about
Woo-hoo!
you talking with Larry live at in Chicago.
Oh, we're very excited. I'll tell you what, we've got the security ready to go. The pom pom girls are ready. They're gonna cheer Larry, Larry, Larry. I'll tell you, it's gonna be quite a show. I'll tell you, it's gonna be a great. No, I'm very excited. All kidding aside, I'm very excited to have Larry in town, down on the trading floor. And yeah, we're very excited. And I know a lot of the people at PriceLinks are looking forward to seeing what he has to say. So yeah, we're really getting really excited.
Stuff. Well, we're looking forward to hearing that and
Yeah,
a lot more. But Phil, thanks a lot for the great information.
you
As we
got it.
speak, typically when you come on, the market somehow does tend to move higher. But
Woo-hoo!
if we
There
had
you
that
go.
stat, typically when
There you
Phil's
go.
on, the market moves higher.
There you go.
And
Thank
we are
you.
trading new highs here in the S&P. We're trading 87.
Woo-hoo.
But thanks a lot, and we'll talk to you
Thank
guys
you,
soon.
buddy. Bye bye now.